This week, markets didn't price the war, they priced expectations. According to Reuters, early in the week, de-escalation, hopes were priced in, oil moved lower, and equities rallied sharply. But that narrative didn't last. Later in the week, oil moved higher again, and markets started to question the move. So here's the real question. If the same week saw both a rally and fear, what is the market really pricing? To understand this week, you need to read Psychology Before Price. At the beginning of the week, the dominant emotion in markets was relief-seeking. According to Reuters and AP News, global equities rallied sharply on de-escalation hopes, while oil moved lower. US stocks saw a strong rally, which tells us one thing: markets did not price peace. They priced a weaker worst-case scenario. The psychology behind this move was a relief rally. Investors were not buying resolution, they were buying reduced downside risk. But in the second half of the week, the narrative changed. Comments from Donald Trump and signals that the conflict may not end quickly weakened the relief narrative. According to Reuters, oil moved sharply higher, and inflation concerns through the energy channel returned. This marked the second psychological break, a narrative breakdown. The early week story was tensions may not escalate. By the end of the week, duration is uncertain, risk remains open. But here's the key part. Despite all this, US equities still closed the week higher. According to AP News, indices held weekly gains. This tells us something very important. Markets are not in panic, but they are not comfortable either. Investors are not fully pricing a continuous worst-case scenario. The third psychological layer this week was oil. Oil is not just a commodity, it reflects inflation, rates, and central bank expectations. According to Reuters, rising oil prices created concern that rate cut expectations could weaken. So when investors look at oil, they are also pricing the central bank path. The psychological chain this week was clear. First, de-escalation hope to oil down, to relief to equity rally. Then, strong rhetoric to oil up to inflation, fear, to rally questioned. This shows how markets really work. Markets do not price news, they price probability changes. Key lesson this week is simple. Retail investors watch price. Professionals read positioning and emotion. And this week showed one thing. Markets moved from fear to hope, and from hope to cautious realism. This was not a panic week. This was a rebalancing week. Final takeaway. Markets love relief, but they do not forgive uncertainty. We talk markets, not noise. D&D.